Good morning, team. This is your midweek video. So, format will be I'm going to go over the indices and then the cues, and then go over these 34 alerts that are left here untouched, so we can go over it together. These will be alerts of breakouts during this last few days, and or trend lines that I've drawn that I've shown you guys have been activated, so we can kind of go back in time and see, what in real time, crystal ball kind of scenario, what would have done, how would it have worked out, and so forth, so we could have a real life like teaching moment. Okay, like this is how I would have executed it, and then this is what would have occurred, and that kind of thing. So, the Nasdaq, we are basically right here. We're below 21. We had this gap down when I mentioned, back last week, that we were extended here close to almost 5-6% up to 21. Normally we have a pullback, and here's true to form. Here's the pullback. Now the only quote unquote bad thing is we are currently in the last 3 days below the 21. So, and we have a 21 that's kind of flattening out, but it's a little bit on the downside kind of projection here. So the projection. So I'm still kind of weary on getting aggressively long. Rule of thumb is if you're below the 21, you're outside the power trend. This was a power trend right here. We have this nice move right here. You can make a lot of money here. You can make a lot of money here. You can make a lot of money here. That's when whenever you cross a 21, you get out. Whenever you're above 21, you get back inside, you get out. And then, what if you would have gotten out right here? You would have basically avoided all this. Now, once you have a nice little power trend, you kind of get back in again. But again, we hit a 200 here. We almost hit it here. We almost hit it here. So we are still in a downtrend. Overall, we are below the 200. So we are still below 200. So long term, we are still on downtrend. We're still in a bear market. Could this be a bear market rally? We shall see after this resolves itself. We are currently showing that it could have been because we are below 21. So let me look at the SPY, the S&P. See, this hit the 200 right on the nose there. And again, we are living right now below the 21. So as long as we're below the 21, you cannot, just by rule, you cannot get aggressively long, because we're not trending higher, we're trending lower, just by definition. So the Qs, kind of same thing. Didn't even make it to the 200. We are, pre-market, we're doing pretty good this morning. But again, we have the Fed meeting on Friday. I'm trying to lighten up as much as possible, but I'm not gonna put my own bias and my own opinion into it. I'm gonna let price action dictate what I do. And so far, we've been going sideways. So going sideways, and if my stocks are acting well, I'm perfectly fine with that. I made this has been a really, really good week. With the market going nowhere and being below 21, because we've been in the right stocks. And then we take profits into strength, and we cut our losses when things don't work out, and we take minimal losses, and we exploit gains, and we take profits into strength. So we are below the 21. That's this bottom line. You got to keep that back in your mind as part of your narrative. The good thing is we have this gap that we need to fill, and this gap is to the upside. So that's good. It means that there will be eventually this little nice room, run up to fill this gap. And then we also have this one over here. I don't recall, because I guess, time, have moved here. I don't recall we have any little gaps below here, but at least we have these to the upside that could be filled. So let's go through our list here. Let me go through all the AZN. I'm currently in AZN right now. This alert, triggered, and I kind of put myself into a 21 kind of stop loss scenario, where we pierced it, but we closed above it. and then yesterday we had a nice move up. So I'm currently very profitable on this, and I'm currently in AZN. LTHM, it was a breakout. I took profits. I closed out yesterday. I think I got in it like on Thursday, not Thursday, on Tuesday, and then it was profitable. And then yesterday we had this nice big gap up, 8% up in a day. That's just screaming for take some profits, take some profits. Again, look at this separation from the 21, and we go down. Look at this separation from the 21. Now, can we go higher? Let me see how we look in pre-market. A little higher, no big deal. But I'd rather take it back near the 21. Let me clean this up. So what I'm saying is, wait for pullbacks to the 21. Wait for pullbacks to the 21. Okay. So don't chase this, because they eventually do come back down again. So again, how do you buy off 21? You don't buy when it hits 21. You go to a lower time frame, or you go to like a previous resistance level of support, and let's say it comes back inside here. This is your buy zone right here, and this is your stop. That's kind of how you buy a pullback buy. So you wait till it comes back to the 21, and then when you see it start heading back up again, then you put a level of resistance, a prior resistance that it clears, which will be right here, and then you get in. So let's say you would have gotten in right here at 28 and change. You got a nice 4-point move on a $30 stock. That's a great return. So that's kind of what I did. I kind of took it right there, and then I took profits into strength. I'm out of it already, but it was a nice trade. If it goes higher today and tomorrow, that's perfectly fine. I'm not a pig. I'm very happy with the gains that I have on this. Okay, PRVA. Here we go, guys. This little trend line I showed you guys here on this one. Look at that. That would have been a great, you got in at 38, 39 around there. Nice move. So that worked out fine. Hopefully somebody took this one. This was a breakout right here. That was nice. So all these breakouts are, when you see multiple breakouts working, that means we're having a nice turn in the market. Let's keep on going. SFM. This breakout probably failed. But again, you're still above 21, so not really that bad. This one right here, boom, you're back retesting it. So you broke out and you're back to retest. So again, 1.5% down. Let me see how we're doing pre-market. Yeah, flat. 1.5% down here. Energy cold. This will probably be one that we would still be in it if anybody took this. CRK, I took CRK. I think I'm currently in CRK. I took this right here. We reversed back in, we came back in, so it's a little bit choppy here in this scenario. But again, I'm holding the 21. My stop is right here. This one pretty much flat. So let's say you took it. You're not down, you're not up, so you're good. So far we're 100%. On if you were taking any of these trades, you're pretty much up. RRC, same thing, pretty flat here, going up. You say you were taking it right there. You got back down again here. Today, yesterday you're back on flat again. So again, flat. XLP working out nicely. You're good. You're good in this one. ERF again. Here we go. You took it. I mean, any of these guys would have made you some decent money. Look at that. Boom. Nice. DK. I saw DK here. DK was one that we took that we made really good money on. I think it was like here. I'm sorry. I didn't make really good money in DK. It was a flat trade. It was a potential that I took a little earlier. I think at 29.5 something like that. I think I took it here, and I got stopped out. I might have made like 0.25% gain, and it was nothing. Basically flat. No big deal. But again, I didn't lose money, and I took a shot. Let's keep on going here. NTR, boom, right there. Love it. Well, so far I think we're hitting 100%. EQT, I had this one and I got stopped out. On this day. I did. I think I took an earlier entry here, and I made a little bit of money. I think when it started coming back in, I got stopped out on this one. But again, yesterday you were up 4%, so you're pretty much flat on this trade. This one's a breakout. You're still doing good here. OBV right there, still doing good. These are all we've covered. We've covered all these because obviously it's a trend alert. That means I drew a trend line while we were looking at a video, and I showed you and I put the trend on, and here's the alert. This one right here, we took it right there. Nice. And TDR, every single one of these guys, every single one of this, you are profitable. Look at that. Every single one of them, you're profitable so far. We haven't had a losing trade yet. We've been flat to profitable in every single one of these alerts. Right there. This is a breakout, not an alert that we actually did. So these are the breakouts. Oxy. Well, I am in Oxy. I was in Oxy. I took it. Very profitable. I'm already 100% out of it. This is way too extended. Okay, guys, let's look at this. This is way too extended. You know, even from here, it's extended. So from this base over here, where it kind of broke down. So what do you want to do? You want to wait for the 21 to catch up. How's it going to catch up? Through two different means. It's going to catch up by price coming back down to it, or price going nowhere, right? And then the 21 eventually, through time, catching up, and then you buy here once you have this breakout. That's how you trade that. So I would not buy here. I don't care if it goes to 85 this in the next couple of days. It's okay. Don't have FOMO. Better go without me. It is not a setup. You know, trade by your rules. The setup was right there. This is the base. That's the setup right here. This would have been a setup if it did. It didn't. This is your last. This is the last time he gave you an entry, or he could have given you an entry right here as well. And so you would have taken that one. You would have gotten stopped out. Didn't work. So you try it again here. This is the money maker right there. Now what do? You wait for it to come back, go sideways, consolidate, and then. Because why? Because now you have a risk parameter. Why not? Let's say you buy here. Where's your stop? Your stop is going to be way down here somewhere. That's way too much exposure because the stock can go sideways for a little bit and it's still not doing anything wrong. Where if it goes sideways or if it comes back down again and it retests, where's the stop? Right here or below 21. So you have a more defined risk and it's a little bit tighter. And your risk reward is a lot greater. That's what we want. We want probabilities on our side. Let's keep on going. Let's look at all the breakouts. This would have been a nice one right there if we were taking that one. But again, this is going sideways. Let me look at this. This is going sideways for a little bit. So this is a cup here, and then a little low handle. Now, ideally, you want symmetry. So you want this to come up a little higher, and then build a handle. This is a low handle. So I'm not too comfortable with this because it's a lower handle. There's still a lot of resistance up here. Okay, there's still a lot of people here in this area that want to get out when it gets into the 80s and 85s and so forth. So, you could take it at 78, 79 to like 80, 81. But again, I'm not looking for that. I'm looking for a little bit more sustainability. So. Again, this could have been the entry right here as well. A little low handle, right here. That would have been a nice entry. But again, we don't have that. So let this go sideways for a little bit. 21 catch up, and then maybe take an entry right here. All right, so let's go over the ones that we have. Sellage. That was nice. Sellage was very nice. I think I had it like a 97, 98 range right here when it came back to a 21. See, here's what I'm saying. Here's the explosion, right? Oh my God, it's going away. It's 109. It's getting away from me. It's going to hit 120. What does it do? Back to a 21. Oh, back to a 21. So Where did I take it? I took it right there where it came back to a 21, and then I saw that it took off from the 21. That's when I got in. I got in 97, 98, and I got out at 103, 104, and then the other one, I think I got out at 109 or 108, something like that. My remaining position. So that was a really, really good trade. I know some of you guys took this one. But again, what do you do here? Nothing. There's nothing to do with this right here. This is way too extended. So what do we do? We wait for the pullback to a 21. When it comes back to a 21, you might want to get it right here at 101 or a little bit of 100. Because if it pulls back and it holds above 100, that's a good sign. Because the 21 should be meeting it right here, and then you draw your trend line right here above the previous little shelf right here, and then you pick it up here again. Okay, you do not buy it here. You do not buy it here. You wait for an entry near as possible to the 21. Okay. This one, well, it alerted us on Friday. Sorry, I'm thinking today's the weekend. Yesterday, so we're flat. Nothing to do with this one. Right here, again, we got the alert right here. This would have been a little better entry. I did not take it at least, but you're up 5% in a day on this one. Not bad. This let me see here. This would have been the entry that would have been perfectly right there. It's way too extended. I just kind of drew this to see if it would do anything, because we had a nice little. This is the cup. We had a high shelf right here and a high handle, and that would have been your entry. So again, extended from a 21, but we were going sideways for a little bit, and if it cleared, then you have a clear line in the sand right here as your stop. Wait for this pullback to a 21. Again, all these 34 that were here at the beginning of the video, all these have been profitable. High flag here. I kind of do it just to kind of alert me. I wouldn't have taken this one just because it's so extended from a 21. Obviously, the entry would have been right there, but that was an earnings, so I wouldn't have traded that. CCRN, I think I do have a small position on this one. This was the entry right here, and the 21 is my stop. So this is still working. And then last but not least, LW, nice little pull back to a 21, and then what do? When it kind of pulls away, you get in. So this would have been a nice entry also to get in. So every single one is 34 or 34. Have either made your money or got you out, or a couple dollar losses. Just nothing. So this is nice. We've been picking good stocks. Good stock pickers market. As long as you're in the right stock, doesn't matter what the market does, you are going in the right direction. All right. So again, we have. Let me go through Tesla, because I do have Tesla, and Tesla split. Tesla, it's currently right now. It is not down 587 points. It's because it's split. So remember, I told you there's a 3 to 1 split. So it's basically right now the equivalent of 909 right now pre-market. So I have the 800, which would give me like the 260, 270, something like that. So this is good. This is the split. Tesla is now a $300 stock, and it's right hovering around that 200, above the 21, building this little shelf here. It's a little. Here's the cup. See the cup. Here's the handle. Here's the handle. So a breakout above this will be a screaming buy near the 21. If you want to take an early cheat entry, you have your 21 as your stop. Okay. And Nvidia was one that I was looking into for earnings. Nvidia reported Nvidia missed on earnings, and it took a little beating. It was down like 162, 164 last night. It recouped a little bit, but still, what do you want to get into Nvidia? Right here. Does that make sense to you guys right here? 193. I wouldn't be buying Nvidia as far as going long until it crosses above 193. Why? Because this is prior resistance. So why am I going to buy it here if I see that it might hit his head again here, I have no no leverage. So it's right at the 50. Actually, it's probably not below because it's 166, so it's probably back here. So I just lost the 50. I sold the 150 put. Okay, so I have and I got $2.5 for it. So I have a 148 cost basis on Nvidia right now on 200 shares. It's 166, so I'm fine. I'm currently fine right now. And in this position, it should be profitable. I should be able to make some good money on Nvidia with a 148 cost, and it's at 166. Even though let's take us another 10 points down at 156. Still, I have a 148 cost, so I'm good. I'm good at this one. So back to the market to recap. We should have a nice little update this morning. Again, I am not going to be very active today in the market. I have nice profit on the week. I have 7 or 8 stocks right now that are very profitable. I have been walking up my stops in all of them, just to actually like force myself to be stopped out at a profit because I want to go in light into Friday. It might be a nothing burger on Friday. It might be nothing, and nothing might happen. But again, it could. It's a big event. The Fed meeting. Just always volatility that day. So I'm going to be as light as possible. Again, if I do not get stopped out today, but let's say we have let's say this holds on, and we have a nice update today. Most of my stocks are going to be nice, and they're not going to get stopped me out. So I'm not going to force the issue. I'm going to let the market and the price action dictate what I do. So I'm going to just stay in them. If tomorrow we have a volatile day and we have a gap down or something like that, and we go up or whatever, I'll get stopped out, and then that's perfectly fine. And I'll have enough cash to take an opportunity if it presents itself based on what I see in the market. Okay, so we'll be scanning over the weekend. I scanned this morning. I got 468 stocks. Let me go. I got on my scans. Let me go through like 10 or 15 of them. Phase right here, building up nice little base. Again, you go up, and then here, guys. Here's a perfect example of what I was saying. Okay, you go up, right? Now, it's gonna go out without me. It's like 290s, and then go to like 350. Well, wait for the pullback to a 21. And what did I say earlier? You can get the pullback to a 21 by two ways. By down in price, and then it meets it, or it goes sideways and the 21 catches up. What happens here? It went sideways and the 21 cut up. Here's exactly what I was saying. So here's proof, okay? Trust me on this. Buy near the 21. So it's building this nice little shelf. I'm a buyer right there. Let's look at a few more. DQ. This was my alert that it triggered that one little minute right here, and you would have gotten stopped out. I did not take this, but again, lost the 50, the 21 is crossing down. Nothing to do here. It topped, almost 3% today, so it might hit his head right here. I'm not gonna do anything with this. I had this. I took profits on this. I think I bought right here, and I got out of it yesterday. That was a nice trade, and nothing to do with this right now. This is nice. This is building a nice little shelf right here. See, it went up. 21 cut up. Where's the stop? Your stop is right here. Where's your entry? Your entry is right here. Let me put an alert here. See what happens. Sech. Too gappy. Nothing to do with this. See what I'm saying? You have this huge, run up, and then what does it do? Back to a 21. Pins it right there. Where's your entry? When it starts pulling away from the 21 and it clears the previous day. That's your entry right there. Up 5% yesterday. Again, all these solo names, you could, and TAN is the one that I'm trading. TAN is the ETF for solar. So you kind of capture all this in that one stock. JKS, it's below, nothing to do here. Again, pull back to a 21, pins it, extended. What does it do? It has a nice little pullback. This is where you buy right here when it clears the previous day. Okay, guys, don't chase this. If you miss this entry, if you miss that, don't buy it here chasing it, because wait for the better entry when he pulls back in, and then you buy here. Okay, this is textbook picture perfect trading. Same thing. See, pulls away. And then what it's to do is going to go sideways. This is going to eventually catch up, and then that's my entry right there. This is a nice one right here. Let me put a little alert here. I will consider that. But again, these are all energy names. They're all energy solar. So I would just stick with tan. You capture them all. I like this right here. There's a nice little. Wow, it's up 15. What is this? TPL. Wow, it's $1,800 stock. It was up 42 points yesterday. Oof. This is see, it's pulling back. Maybe we could take a look at this with a tight stop right here. See, extended right here. You would have bought it here. Pull back to a 21. This is your next entry. But again, my Benico Biotech XPI. This is nice right here. I wouldn't mind taking an entry right there. So you'll clear this and I'll clear that. Let me look at XBI, which is, I do have XBI. I've been telling you I was hawking XBI up 2% yesterday. This is the other buy point right here, or clearing the 200. Put an alert right here. Oh, nice, nice. I should be up nicely today. I have an 80. I think it's 89.50. I have an 89.50 cost basis because what did I do? I bought it right there when it got above the 21. That's what I bought it right there. Let's look here. Yep, I have a little alert here. See? It extended. What does it do? It goes sideways. 21 catches up, consolidates. I am definitely a buyer right here. But again, if it was a regular stock, I'd rather just do XPI. This is like below 50, below 21, crossing down. I'm not interested. Don't touch this. Technical wise, this was the entry, right? Right there. That was the entry. What do you do here? You wait for this to go sideways. 21 catches up. Then you're a buyer. See? Extended. Let's say you would have taken this at 91. Yeah, you're profitable, but then you don't chase it. 97. It came all the way back to where? At 21. Okay? So where's my entry? My entry will be right there. My entry will be right there. See? It's stepping up on the 21. A little bit extended, comes back into it. A little bit extended, let it come back into it, and then you're a buyer. See? Extended from 21, what does it do? It goes sideways. It goes sideways for about, a week and a half, 2 weeks. 21 catches up, you're a buyer right there. It's just textbook trading, guys. This is so simple. Trading is so simple. Here we go. That was a nice one. Nothing to do with this one right now. This is nice right here. This little wedge right here. I am definitely a buyer if it breaks out of this wedge, because it's holding on to a 21 to the 50. This is a low risk entry. I'm a buyer right here. Where's my stop? Right there. See how you got this? Makes sense to you guys, right? This is your stop below the 50. So you buy it at, let's say 27, 50, 28. Let's say 28. And where's your stop? Right here at 26.50. So you have a point and a half to potentially, break away out of 30. You got about 3 points. So you have a 3-to-1 ratio. It's not bad. This one's building a nice little shelf right here. Okay, but again, it's biomedical. These are all solar and bio. Number 3, number 1 is solar and bio. So TAN and XBI, guys. TAN and XBI. Just keep an eye on XBI and TAN and just trade those because they're the leading industries right now. You have a lot of stocks in bio and you have a lot of stocks in solar. So which one's the best one? You don't care. You got them all in TAN. You got them all in XBI. Okay. Let's see the shelf right there. GBT. This is a company takeover. Nothing to do with this. I got taken over. If you had it, if you would have had it in the 40s, then you made nice money on this. And another takeover. See, boof. And then what does it do? It goes sideways. 21 catches up. Just repeating theme, guys. Just be patient. Be patient. Don't have FOMO. Like, oh, I missed it. Let me go on for the ride. Just wait. Wait for it to consolidate. They all do. See? They all do. And then you take it here. Okay, yeah, you got stopped out, but that's what you do, even here. You take it here. Okay? You go sideways for a little bit. You take it here. And then what does it do? You go sideways for a little bit. And you take it there. Okay? Simple. Let me do like 5 more. Halo. I'm not gonna do anything with this. Take this off. This is a broken stock. I don't want to do anything with this. I made good money in this one. I'm already out of it. It's way extended. What do we do, guys? This was the entry, right? What do we do? Wait for the 21 to catch up. Then it goes sideways or pull back down to a 21. This is this is nothing to do with this. Nothing to do with this. This is nothing to do with this. Again, they're all biomedical. Let me see if I can get into any other sectors. This right here is nice, but an energy alternative, Nextera, NEP. And just do one more. Yeah, this would have been the entry right there. So again, I don't want to take this, to be an hour-long video, but I want to give you an idea, just kind of teaching moment. You saw that. You saw it with your own eyes. When you have stocks that take off, don't chase them. Be patient. Wait for them to pull back to the 21. And then you buy once they break out from a bounce on the 21. Don't buy here. Don't buy when they come down to the 21. Don't buy low, buy high. Wait for them to go higher and get out on a bounce, then you buy here. Okay? That's how you buy. I showed you. They go down either by price coming back down to a 21, or they go down to the 21 by going sideways and the 21 eventually catching up, and then you buy here. Simple. Just do that one thing. I guarantee you're going to be very, very profitable. You're going to have peace of mind. You're going to be confident, and you're going to be calm because you have disciplines, you follow your rules, and you are patient. Don't have FOMO. Wait for the right price. Don't buy when it's low. Buy when it's right. Okay? And you know when it's right because I've shown you a gazillion times. All right, guys. We'll have a weekend video. We'll go over all these right here. I'll scan some more and I'll send you the list. Be good. If you have any questions, please, 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 I'm here. I would love to give you guidance in anything that you are having problems with or need further collaboration with. All right. Be good.